Hey everybody, welcome back to the Monday episode of Milkshakes Markets Madness. This is our Monday peek at the week. Brent, last week when we recorded for the Monday peek at the week, you had shared your excitement for the week ahead because it was a busy, jam-packed week of at least important data like inflation. How are you feeling about this upcoming week?
Yeah, kind of the same thing because what happened, so I'd sent out a number of charts at the end of last week, where things were just kind of sitting right on their support lines, and it could really go either way based on the data that we received this week. And the data we got this week, it definitely wasn't dovish, but it wasn't super hawkish either. But I would say that the data that we got this week kind of leaned hawkish, or at least more hawkish than I think the market was expecting. And so markets sold off again this week. Again, not dramatically, but they did sell off. And the last week, Apple sold off hard. And that has big implications because in the world of passive, when a big component like that has a drawdown, it impacts the pricing of the ETFs and the passive indexes and stuff. This week, we saw a big drawdown in NVIDIA. One of the charts that I posted last Friday was NVIDIA, which was kind of sitting on kind of an important level. And it came down pretty hard this week. So in the last 2 weeks, we've had two of the tech leaders, Apple and NVIDIA, and two of the better performers of the year, kind of break down. Now, will they continue down or will they bounce? It's kind of pretty important at this point. Again, not necessarily because they're in bad shape, but the impact that these drawdowns will have on all of the indexes in which they sit. And once these passive indexes, once somebody starts to sell, it kind of becomes a self-fulfilling prophecy. And so I think it's very important. And as a result of what happened this week, I think the data next week now becomes more important than it otherwise would have been. And so if we get continued data that reflects a strong economy, or that reflects that inflation is not falling at the rate that many would hope it is, that the rate hikes are still on the table. And, I think the markets in many ways were pricing in either no more rate hikes or at best one more rate hike. But I think, to the extent data stays strong and inflationary pressures stay high, the market's going to have to come to Jesus with the possibility that it might go higher, that the rates might go higher.
Well, I just had an idea, so I'm going to tease the midweek update with the possibility that you and I talk a little bit about passive versus active management and some of the things that can happen in a market where it's primarily driven by passive investment vehicles. We won't get into that. There's phenomenal work done by Mike Green on that. You had just shared a conversation with Mike Green, so people should definitely check out that interview. It'll probably start floating around in a couple days or sooner. But I think it'll be good. We do get good feedback from people when we kind of dissect some of these terms. So the passive versus active will be a good one. You had also mentioned the word hawkish. And again, I think that's another one we can dive into a little bit more in the midweek update when we have more time. Let's keep this focused on what's happening this week. But because you did mention the word hawkish, we have the FOMC meeting minutes coming out later this week. What do you think those minutes might say, and how would the market react to something that's a bit more hawkish?
Well, if they react hawkishly, or if the minutes seem hawkish, then I would expect bond prices to continue to fall, and I would expect equities to sell off as well, because that would mean more rate hikes coming and inflationary pressures are potentially still here. Again, I think in many ways, many people saw the hike in July as the last one, and we're now on an easing cycle. And, that could be. And I'm not saying that won't be the case. I'm just saying I'm not 100% dedicated to that view. And I can make some arguments of how, hikes could stay on the table. And as a result, that's kind of where I've been. But a lot of people dismiss minutes and don't think that they're a big deal. I actually kind of tend to think that, to me, that there's an opportunity for surprise in minutes, because when you get the initial Fed statement, it comes out, and then Powell comes out, immediately thereafter in the next hour, and he kind of explains everything. And so I think in many ways, the press conference preempts the statement, or overrides the statement. But then when you get the minutes, the 6 weeks later, I can't even remember. I think it's 6 weeks later. You get into more details of not only what Powell thought, but what some of the other members thought, and so I think it has the potential for surprises. And as a result, I always pay attention to the minutes.
So you have an FOMC rate decision, whether they pause, hike, cut, whatever it is. Then Chairman Powell, in this case, will come out, do a press conference. He'll be peppered with questions, and it'll shine some light on reasons for the decision that they made and why they did it. But you really don't hear anything else as to perhaps what the rest of the committee was thinking. So that's why you're emphasizing the fact that sometimes these minutes can be a bit of a surprise.
Yeah, and sometimes they're nothing, right? Sometimes they're nothing burgers, but they always hold that possibility that there's going to be one or two lines in there that didn't get fleshed out in the meeting or in the press conference, and it has the potential to influence markets.
Yeah, in this past weekend's episode, we talked about our full-length upload. We did discuss inflation, various views that people were making, prior to CPI, and then what the PPI data kind of did to some of those views. And we debated a little bit back and forth about the potential of future rate hikes, if it's just one, or we massively underestimating what the Fed still has potential of doing. But jumping over the pond a little bit, later in the week, we also have a July CPI data report for the UK. Do you look at some of this data out of pure entertainment and curiosity, or do you think it matters big picture?
In the big picture, it doesn't matter over a long period of time, but over the short period, it does, because a lot of the movement in currencies, and I pay attention to currencies quite a bit. It has to do with rate hikes. If a country is going to raise interest rate, that tends to make its currency stronger. There was some strong data came out in the UK this week. The pound kind of jumped on it initially. Then when the PPI data came out today with the Fed, with the US, then the dollar rallied, and the pound sold off. But yeah, that's definitely things that you need to keep track of. And I think it's important because in many ways, I think that Europe, by and large, is not going to be able to hike the way that they have been predicting to be able to, or that they thought they would. But it's possible that the inflation stays higher in the UK and that they have to hike. And so I think this has big implications for overall currency markets.
Well, you did mention Apple as one of the things that you were watching. The other A in the FANG stock conglomerate is Amazon. I'm not sure the exact date, but they have had a Amazon Day foray, and we have retail sales coming out on Tuesday. So maybe Amazon can drive some of those numbers up. We talked about inflation, as I just mentioned, quite a bit this past weekend. So definitely tune into that episode where we cover some of these economic indicators that are potentially showing signs that inflation isn't going anywhere. Retail sales could add fuel to that fire and that discussion. We have housing starts on Wednesday. Another topic we covered over the weekend was the housing market, and we dove into commercial real estate a little bit as well. And we'll also see some manufacturing data. There's the industrial production index, and there's also Philly Fed index. So there's a lot on deck. There's a huge variety of information that, maybe if something comes in with some shock value, can move the market in a direction that's somewhat unexpected.
Yeah, I think any of them on their own are not that big a deal. If I had to just pick one of them out for the potential to move markets, I would say the Fed minutes. But again, sometimes those can be nothing burgers. So it's not any one thing that next week is really jumping out at me. It's just that there's a lot next week, and you can get death by 1,000 cuts, so to speak.
Well, let's see what happens. I appreciate everybody for joining us. Brent, thanks for sharing your thoughts on the week ahead. This is our Monday peek at the week. We wish you all well and look forward to seeing you back here in a few days for our midweek update. This show is provided for entertainment and informational purposes only. It should not be relied upon as legal, business, investment, or tax advice. Neither the hosts, guests, nor any funds they may manage intends to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies.